Yesterday we had a bull running near Newark Penn Station, and if this isn't the start of a new bull market, I don't know what is. This comes just a day after Fed Chair Jerome Powell pretty much pivoted his messaging, saying that the Fed is preparing to cut interest rates 3 times next year, and that helped fuel a rally. So I thought it was funny that we saw a bull running in around Newark Penn Station. The timing of that was pretty interesting, in my opinion. But we're seeing a lot of positive technicals in the market. The stock market rally is broadening out to smaller cap stocks. The Magnificent Seven yesterday didn't do as well, and smaller cap stocks actually took the baton and did pretty well. The Russell 2000 is now up 22% from its lows on October 27th, and that means that the Russell 2000 small cap stocks are now in a bull market. So that's good news. And yesterday on CNBC, we heard Wall Street bull Tom Lee say that it's possible that small cap stocks could gain 50% next year. And I wouldn't be surprised because small cap stocks are the most beaten down stocks from the 2022 into early 23 bear market. So there's a lot more to go, at least for a reversion back to the mean for small cap stocks. And by small cap stocks, that also means mid cap stocks, in my opinion. Pretty much anything less than a $50 billion market cap that got hit pretty hard in the 2022 bear market into early this year, I think is right for at least a reversion to the mean, which is why for small and mid cap stocks, I think 2024 will be a good year for them. And the Magnificent Seven will do okay, but I don't think we'll do as well as small and mid cap stocks. We also heard some good news about retail sales. It came in at a positive 0.3% month over month for November, while the estimate was supposed to be a decline. So that shows that consumer spending is still resilient. Mortgage rates are now below 7%, and the average 30-year mortgage rate's now about 6.6%, which is good news and could hopefully ease some of the affordability in the housing market right now. We also saw some good news. There was a report that came out that New York median rent dropped from $4,095 a month, which is insane and a lot of money, dropped by 2% to $4,000 a month. This is the first drop after 27 months of straight increases. So that's good news, and hopefully that decline in rent gets spilled over into the shelter component of our CPI inflation reports. And hopefully, once that really does happen, CPI inflation should come down even more. Because right now, as I said in previous videos, our CPI shelter metric in our inflation reports is lagged. So once this data really shows in the reports, it'll show that inflation is coming down even more, which is good news. But overall, I'm seeing a lot of positives in the market. The only thing I'm worried about is not all Fed officials seem to be as optimistic as Jerome Powell. We had a New York Fed official had an interview with CNBC, and he said that the market's is a little bit premature in terms of pricing and rate cuts next year, as there's still more work to do with inflation and bringing prices back to that 2% level. So the market sold off a little bit in the morning when it heard that. Obviously, we have to see how the market ends up closing today. If the market closes positive today, it would be the 7th straight week of gains. But that comment by the New York Fed official shows some dissent in opinion that not all Fed officials are as dovish as Jerome Powell. And if that's the case, maybe the market is prematurely pricing in 6 rate cuts next year, because Jerome Powell did say that we would have 3 rate cuts, but it seems like this Fed official from New York says that even that might be too premature because we're still worried about fighting inflation. So we might see some more Fed governors in the coming weeks, maybe walk back some of Jerome Powell's dovish comments and his optimism about rate cuts next year. We might see them, speak that maybe not even mention cuts at all, that inflation is still what we're looking at and fighting. So we might hear some dissent, and that might maybe stall out the rally a little bit, but I still expect the market to do very well into year end, and the Santa Claus rally I expect to continue.